Yes, people, a very, very happy afternoon to all of you. Thank you so much, people. So, guys, we're doing this topic called as Consolidated Financial Statement, how to prepare the CFS. Now, we did till example 9 in the last class. Example 10, 11, 12. Three examples were given as homework. Have you all done it? देखो PDF नहीं मिला होगा मिला Okay, ठीक है. I'll send the PDF anyways today. Others I sent it, I didn't send it to you. अरे वो ग्रुप में नहीं है ना अभी तक. ठीक है. Others have completed? Okay. Any doubts in that? No doubts. Okay. So I have three more questions to be done today. Once I do that, we'll do it very quick, and then we'll go for next adjustment. Next adjustment to be done in AOP. So let me start with illustration one, people. It says that from the following data, determine in each case. Determine in each case means what? It's going to be more than one case. More than one case. In each case, you have to compute following. What are you supposed to calculate? Minority interest as on the date of acquisition and minority interest on the date of consolidation. So two times you have to calculate minority interest. Okay. Then what are we supposed to calculate? Goodwill and capital reserve. Now they have not mentioned whether the goodwill should be calculated on the date of acquisition or the end of the year. What will you do? Donkey fellow. There's no concept of calculating goodwill at the end of the year. Goodwill is only to be calculated on the date of acquisition. Second option is not even there. Does not exist only. It is not applicable. Only one and only option, goodwill and capital reserve, only on date of acquisition. Okay. Then amount of holding company's profit. Amount of holding company's profit in the consolidated balance sheet, assuming holding company's own profit is 2 lakh. What they're doing is holding company's own profit, there is reserve and surplus is 2 lakh. You are supposed to calculate what is the reserve and surplus that will show in the consolidated balance sheet. Correct? So basically working note number 4. Working note number 4. Got it? Not got it? Okay. So working note 1, AOP. Working note 2, goodwill capital reserve. Working note 3, minority interest. 4 is consolidated reserve and surplus. But we will not do that. We have to do the format a little bit in different way because we have 4 cases or 5 cases to accommodate. How many cases? 4 cases to accommodate. Okay. Let's have a look at what they've given. Case they have given. Okay. Subsidiary company. So this particular holding company has got 4 subsidiary company A, B, C, D. All the 4 cases are independent case. All the 4 are independent case. They are not together. All are different cases. So in company A, what is the share that the holding company owns it? So holding company has got 90% stake in subsidiary company. Upon a remaining 10% is held by others, which is minority interest. To acquire that 90% stake, what is the money that you have spent? 1,40,000 is the money that you have spent from your pocket. That is cost. On the date of acquisition, which is 1/1/2001, two information is given. One, share capital is given. This is the share capital of the entire subsidiary. In that, our share capital is how much? 1 lakh ka 90%, which is 90,000. Okay. On the date of acquisition, they give reserve and surplus, which is how much? 50,000. In the 90% belongs to us. Remaining 10% belongs to minority. The 90% which we say belongs to us, technically it is our pre-acquisition profit. It will belong to us provided I pay money to buy this amount. Because this 50,000 is belonging to somebody else. It is belonging to somebody else. From that somebody else, I've got 90% stake. So this 50,000 is belonging to him. If I have to get that money, I have to purchase that profit from him. So this is pre-acquisition profit, which is purchase profit. Will I pay full 50,000? No. I'll pay 90% of that. 90% of that. Okay. On 31/12/2020, 2001, on the consolidation date, on the date of consolidation, again they have given capital. Does the capital change? No. Opening capital, closing capital will remain same. Change when? In between, if you're issuing any share, if bonus is coming in that case, the change of share capital happen. Otherwise, it is going to be the same. Profit and loss is given 70,000. Profit and loss is given 70,000. Can I say this is during the year profit? Can I say this is during the year profit? No. This is at the end of the year. 50,000 is the opening balance, 70,000 closing balance. This is opening date, this is closing date. In between, how much is the profit? 20,000 is the post-acquisition profit. So your post-acquisition profit is the balancing figure. Post-acquisition profit is a balancing figure. Any problem? No problem. Like that, they've given information for case 2, case 3, case 4. Any problem? No problem. Now, how do we calculate this? How do we calculate this? How do we do? How do we do it? You can do AOP, no doubt, but it'll be too time consuming. How can we do it in short? Because 4 cases are there. This is going to be max, let's say 5 marks. So you have to complete well within the time. So your working note should not be so exaggerated also, or it should be time consuming. You should do it in short and sweet manner. What they have done, we'll see. Case 1, case 2, case 3, case 4. Minority share is given. Minority interest as of the date of acquisition is given. Okay. We'll do one thing. How do we do working note 3? Minority interest. What is the format? Particulars. Wait. Just below that. Below that, what does it come? Share capital on date of acquisition. On date of acquisition. Okay. Then add, not less. Plus. Plus you say. I heard less. Okay. Add pre-acquisition profit, which is nothing but on the date of acquisition. What do we get in total? Minority interest on date of acquisition. This is what they're asking. With that, if I add post-acquisition profit. Post-acquisition profit, which is the profit during the year. What will I get? Total minority interest on date of consolidation. On date of consolidation. Okay, this is the format. Can I put here case 1, case 2, case 3, case 4? Case 1, case 2, case 3, case 4. But before I do this, I have to do one more additional working note to calculate the post-acquisition profit. Post-acquisition profit. Can we do that working note? This is not working note. This is main answer. This is the main answer. This is not working note. Because the requirement of the question is what? Calculation of minority interest. This is the main requirement. So this is not working note. This is main answer now. This will be working note if you are doing the consolidated balance sheet. Here, this is the main answer. So now, working note 1. Working note 1. Working note number 1. What is it? Calculation of post-acquisition profit. How do we do it? Think of format in such a way that I can make it a compact one. How can I make it a compact one? Total profit minus profit on 1/1/2001. If I minus, I'll get during their profit. From the closing balance, if I minus opening balance, I'll get the during their profit. So format is particulars. Again, case 1, case 2, case 3, case 4. You have to be smart enough that you get the answer also right. At the same time, the format should be in such a way that it should look very compact, easy to understand, and you have to complete within the time frame. So you have to think. So what will I get? Post-acquisition profit. From total profit, if I minus profit on 1/1/01, we can call this as pre-acquisition profit also. Am I right? This is nothing but pre-acquisition profit. This is pre-acquisition profit. Tell me people, one by one, what is my total profit at the end of the year? 70, 20, 20, 55. Will you remember this? Okay. First is, tell me all the total profit. 70, 20,000, 20,000, 55,000. From that, we have to minus the pre-profit. Pre-profit. What is pre-profit? 50, 30, 20, 40. You have to minus it. So I'll put in bracket 50, 30,000, 20,000, and 40,000. Any problem? 70 minus 50. At the end of the day, 70. Beginning 50. So during there, how much have you earned? 20,000 rupees. In the beginning of the year, 30. At the end, it is 20. Minus. Beginning 20. Sorry, beginning 30. Beginning 30. Pre was 30. In beginning 1/1/01 was 30. When you came to 31/12, is it? 31/12/01, it became 20. 30 ka 20 it became. Profit reduced. Profit will always reduce when there is a loss in the current year. So beginning 30 profit, current year 10 loss. So what is my closing balance? 20. I said beginning 30 profit. During their loss 10. What is my closing balance? 20. Correct? So now profit is given 30 beginning May. Profit is given at 10. How much? 20. So during there, how much is the loss? 10. So put this in bracket 10. This is post-acquisition loss. Post-acquisition loss. Profit slash loss in bracket. Profit slash loss. Any problem? Beginning 20, ending 20. Post is 0. Post is 0. Okay, not okay. Beginning 40, ending 55. Beginning 40, ending 55. How much have you earned in the current year? 15,000 rupees. Any difficulty? Online people, any difficulty?
No, sir.
Okay. Can we go back to the main working note? Please tell me, can we put one percentage ka column here in between? Yes. So basically, what we should have done is we should have added just percentage column. Can you put just percentage column in between? How much is percentage of holding for minority? 100% minus 90%. How much it is? 10%. Okay. So that should come horizontally. Sorry. It'll come like this. Sorry. Yeah, here we can put it. How much it is? 10%. Then 100 minus 85, 15%. Then 100 minus 80, 20%. Then 100 minus 100, 0%. Oh my God, super it is. Now, the total share capital is 1 lakh. 1 lakh ka 10%. How much it is? Can we put share capital ka amount also here or not required? I'm putting it, I leave it to your choice. I have this luxury, but you don't have it. I'm so sorry. I'm just trying to put one down line. You can try to fill in somewhere in between. What is the total share capital, people? Total share capital. 1 lakh, 1 lakh, 50,000, 50,000. Okay. Are you able to fit in inside? Okay, very good. Now this becomes more convenient for me. So 1 lakh at 10% is how much? 10,000. 1 lakh ka 15% is 15,000. 50,000 ka 20% is 10,000. And this is 0. Okay. Now pre-acquisition profit. Pre-acquisition profit is how much? 50,000. 50,000 ka 10%. 5,000. If you want, what we can do is we can put pre-acquisition profit in between here also. You can put pre-acquisition profit in between also. Total pre-acquisition profit. Total pre. If you want. If you want. Otherwise, you can skip it. Now, next pre-acquisition profit is 30,000. Guys, this is pre-acquisition profit. In that, 85% belongs to somebody else and 15% belongs to minority. So, 30,000 ka 15%. 4,500. And then 20,000 ka 20%. 4,000. And this is 0. This is 0. Anybody's got any difficulty in calculating this pre-acquisition profit? Okay. Others? Online? If you want, you can insert this item also. I'll just do it if you want. Pre-acquisition profit. And post-acquisition profit. This is coming from working note number 1. Tell me the pre ones, fatafat. 50, 30, 50,000, 30,000, 20,000, 40,000. Okay. What is post? 20,000, negative 10,000, 0, 15,000, positive. Okay. Now, please tell me, people, what is the total minority interest on the date of acquisition? I'll keep this separate so you don't get added. This is separate. Now 10,000 plus 5,000, how much it is, people? 15,000 is minority interest on the date of acquisition in case 1. 15,000 plus 4,500. 19,500 is the date of, sorry, minority interest on the date of acquisition. 10,000 plus 4,000, 14,000 is minority interest on the date of acquisition. And this is 0. Any difficulty? No. Now post acquisition profit. This is post acquisition profit. This is minority ka interest. So 20,000 to 10% is how much? 2,000. 10,000 into 15 percentage. It is negative. Can I put it 0? Should I put it 0? Or should I put negative 1,500? Negative 1,500. So negative 1,500. This is 0 into 20 percentage is 0. 0% into 15,000 is 0. So can you please tell me the total minority interest on the date of consolidation? 17,000, 18,000, 14,000 and 0. Is it matching with the textbook?
Yes, sir.
Super. 17, 18, 14 and 0. Online people, okay, not okay?
Okay, sir.
Now, next is what? Calculation of goodwill and capitalism. Sorry? You want to see that? Okay. Date of consolidation. DOC is date of consolidation. Done? Next is goodwill and capital reserve. For me to calculate goodwill and capital reserve, what do I need? I need investment amount. Okay, then what do I need? I need net asset. In net asset, what do I need? Share capital on the date of acquisition and pre-acquisition profit, basically. Yes. If these are there, I can do it. Okay. Now, how do we prepare the tabular column? We'll keep same case 1, 2, 3, 4. But what columns we should have in, additionally, horizontally or vertically, that we have to decide. Tell me, people, how do we frame the format? Okay. Can I do it first? In case if there is any change in format, I have luxury to change. You don't have it. So I'll do it. You let me know if there is any changes to be done. So this is heading, people. Heading is calculation of minority interest on date of acquisition and date of consolidation. Next is calculation of goodwill or capital reserve, which is also called as cost of control. Now, particulars. We need percentage here. Yes. So I'll put percentage column here. Percentage will come here. Then I'll put case 1 here, case 2, case 3, case 4. Percentages, my dear, this is holding company ka. So you have to put minority ka nahi, holding ka. 90%. Lack of presence of mind. 90%, 85%, 80%, 100%. Very good. Now, I want investment. One second, let me see. Investment is how much, people? They have given 1,40,000, 1,04,000, 56,000, 1 lakh rupees. Okay, 1,40,000, 1,04,000, 56,000, 1 lakh. I feel we should have a little bit more gap between the 4 columns is what I think. Let me see. Let me check. I'll just try to move this a bit more here. Okay. Minus net assets. Less net assets. In that, the first item is share capital. Share capital. Now, share capital on the date of acquisition. On the date of acquisition. How much it is? So can we do directly here itself? We'll do working? Okay. So 1 lakh into 90%. How much it is? 90,000. Then pre-acquisition profit. How much is pre-acquisition profit? 50,000. Sorry. No, what we'll do is we'll do working note for each and every item here. Besides, we'll see. We'll see. We'll do this. Next is pre-acquisition profit. How much? 50,000 into 90%. How much it is? 45,000. 45,000. Okay, not okay. Now take the difference. Tell me the total of these people. 90,000 plus 45,000 is how much? 1 lakh 35,000. 1 lakh 35,000 is what you got. But how much have you paid it? 140. Have you paid more or less? You paid more 5,000. Anything that I paid more is goodwill. That extra money what you've paid is for acquisition of future profit. The current shareholder is going to sacrifice his profit. To sacrifice his profit, he's asking the future profit now itself. So that is called as goodwill. How much it is? 5,000. No, not required. You just write goodwill here and capital reserve in the next line. Got it, not got it. Can we continue like this itself? Okay. Now tell me people, not 1 lakh. Now 1 lakh only, okay. So 1 lakh is the share capital again into 85 percentage. How much it is? 85,000 is the share capital. Share capital. And what is the pre-acquisition profit? 30,000 rupees. 30,000 into 85 percentage. How much it is? 25,500. These both put together is how much? 1,10,500 ka product you got. You got the net assets for 1,10,500. But how much have you paid? Only 1,04,000. Have you paid more or less? Less by how much? 6,500. That is capital reserve. Next. Till this you completed. 6, C3, C4 will do it together. Till this you copy paste. We'll do it together then. Done? Okay, next. Share capital of C3 is, case 3 is how much? 50,000 rupees. In there, how many shares we are acquiring? 80 percentage. So 50,000 ka 80 percentage. 40,000 rupees is the share capital that we are acquiring. And on that day, the pre-acquisition profit is 20,000. So 20,000 ka 80 percentage. 16,000. Both of them put together is how much? 56,000. 56,000 ka benefit you're getting. And how much are you paying? Same 56,000. So neither goodwill nor capital reserve. Neither goodwill nor capital reserve. Next, 50,000 is share capital. So same, no, full 50,000 will come. 50,000 into 100 percentage. Reserve and surplus is 40,000. So 40,000 ka 100 percentage. How much it is? Full 40,000. So total money paid is how much? Sorry, total benefit you're getting how much? 90. How much have you paid? 1 lakh. You paid 10,000 more. So it is goodwill. 10,000 goodwill. Online people, okay or not okay? No response. Sridhar is not there in the meeting. Others, please respond.
Okay, sir.
You guys are trying to respond, but I'm not able to hear your voice. Chalo, great. I'm getting messages. Okay. Done, people. What is next? They want the total reserve and surplus that you will show in the consolidated balance sheet. So I want consolidated reserve and surplus. Calculation of consolidated reserve and surplus. How do we do it, people? Format, think about it first. What is the original format? H limited का reserve and surplus plus post acquisition profit. Post acquisition profit. Post acquisition profit, normally we get it from AOP, but here we didn't do AOP. So you have to do percentage, and show calculation in this itself. So should we put percentage ka column or not? We have to put it. Yes or no? What else you have to put? We'll put post acquisition amount also.
Yes.
Okay, we'll do it. Okay. So particulars. Case 1, case 2, case 3, and case 4. I want the percentage, people. Percentage. 90% is held by the holding company. 90%, 85%, 80%, 100%. Post acquisition profit. You can avoid this still, but I'm just writing it for your convenience. Working note number 1. How much it is? 20,000, negative 10,000, 0, 15,000 positive. Okay. This is just the data. This is just a data point. Now, reserve and surplus of H Limited. The question says that the holding company's profit will be 2 lakh in each case. So can I put 2 lakh, 2 lakh across? 2 lakh, 2 lakh, 2 lakh, 2 lakh. With this add post acquisition profit of H Limited, which is how much? 20,000 into 90%, 18,000. 10,000 into 85%, negative 8,500. 0. 15,000 into 100%, which is 15,000. So this is consolidated reserve and surplus. How much it is? 2 lakh, 18,000, 1 lakh. How much? 2 lakh minus 8,500. 1 lakh 91, very good. 1 lakh 91, 500. Then 2 lakh, 2 lakh 15,000. If you observe in textbook, what they've done is, no, what they've told is amount to be added. With this, what it is supposed to be add? Whatever is the profit of holding company, that know that they're supposed to add with that. So with this one, 18,000, 2 lakh, if you add, what will you get? 2 lakh 18,000. With this, if you 2 lakh minus, what will you get? 1 lakh 91, 500. So basically, the adding of 2 lakh is what they have not done in the column. They have told in the format before. Correct? Technically, this is wrong because the question is very clear. What is the question asking? The question is asking you, what is the amount of the holding company's profit to be shown in consolidated balance sheet? So basically, they're asking you consolidated reserve and surplus. You have to present this, and this is your final answer. This is your final answer. In textbook, what they have done is they've just done this and left it. And in the format, they've told that with this amount, you just add the 2 lakh rupees. You add it, they've orally told it. We can't write like that in come. We have to present the final amount. We have to present the final amount. Okay or not okay? Second one is? Yes. Now, with this, normally what do we do? I'm so sorry. One more thing we have to add. With this, we add capital reserve. We add capital reserve. Capital reserve is there only in case of case 2. That we have to add 6,500. So in that case, the final amount is 2 lakh 18,000, 1 lakh 98,000, 2 lakh, and 2 lakh 15,000. This is the final answer. This is the final answer. Any difficulty, please? Any difficulty? So here, if you put one more column in textbook and put 2 lakh, 2 lakh, 2 lakh, 2 lakh, this you add, you'll get the final same answer. Yes or no? 2 lakh 5,000, 2 lakh 6,500. But they have not subtracted 8,500, is it? Okay, their format is basically they've done some khichdi. I will not recommend this. You can stick on to what we have done. What they've considered is goodwill and capital reserve is separately considered. Wait, why am I saying this? Oh my God. 2 lakh and 2 lakh. Here, what they are not considering is in case number 2, capital reserve they are not considered. Is it right or wrong? Absolutely wrong, because they're asking what amount of holding company's profit in the consolidated balance sheet. Holding company's profit. Holding company's profit means, what does it mean? Only profit will we take, or will we take entire reserve and surplus? Entire reserve and surplus. Now, there could be one more opinion. Now, if you see, observe in the question, they have not told this is reserve and surplus of holding company. What they have told, this is profit of holding company. With this, we're adding profit of subsidiary company. Profit of subsidiary company. So I'm getting consolidated, not reserve and surplus. I'm getting consolidated profit. So one more school of thought could be that since they're asking only profit and not reserve and surplus, I will restrict my answer to this. So in exam, what do you write in income? You write this as consolidated profit income. You add capital reserve and you say this is consolidated reserve and surplus. Consolidated reserve and surplus. Right? Maybe in exam or in the textbook, what they've done is they've stopped till here. They've not gone beyond this because they're asking consolidated profit, not reserve and surplus. So we can stop till here. We can stop till here. But in case in exam you have the confusion, doubt that do they mean profit means actually profit, or are they meaning reserve and surplus? If you have that doubt, then you can add one more line of capital reserve and write this part and also come. Okay, not okay. Can I continue? Now from here, we'll go to scanner question 8, people. Scanner question 8. This question is your PEP July 21 question. July 2021 examination question. COVID question. Now one of it. Make exam got postponed to June. June ka became July. This is July 21 का question for 5 marks. तेरा क्या होगा किस चीज के लिए? Election. For a second, I got scared that Corona is coming back or what? Wait. That and all we'll not discuss. Whether the exam is going to get preponed will never happen. Postponed will happen, but preponed will never happen. Preponed कैसे होगा? Have you seen any CA exams getting preponed? No exams will get preponed. It's always postponed, but never preponed. We have to wait and see. See, mostly elections will get over in April. If that is the case, May will have the exams. Okay. That's what we have to wait and watch. If the election is happening in May first week, if there is a clash between us and them, obviously ICA will postpone the examinations. But is that our concern? No. If you're getting bonus date, that time we will see. As of now, we'll be mentally prepared that May first week is your exam. That's all. Scanner question 8, people. It says that long limited acquired 60% stake in short limited. More than 50% stake means what? Control is there or not there? Control is there. By that virtue, long limited has become the holding company of short limited. So long limited holding company, short limited subsidiary. Remaining 40% is held by others. They are called as minority. For a consideration of 112 lakhs. So 1 crore 12 lakh rupees they have paid to acquire 60% stake in the subsidiary. Okay, not okay. Have they acquired or did the company issue the shares? They've acquired. Issuing the share is different. Acquiring is different. Issuing the share means what? The company has directly issued the shares to holding company. That is different. Here, we are not getting the shares issued. The company issued the shares to somebody else. From that somebody else, we have acquired the shares. So this 112 lakh rupees, to whom have we paid? To the old shareholders. Now full stop. On the date of acquisition, short limited equity share capital was 100 lakhs. In that, our capital is how much? 60% of 100 lakh. How much is our equity share capital? 60 lakh is what we are getting. We are getting capital worth 60 lakh. Revenue reserve was 40 lakh and the balance in the P&L was 30 lakh. So reserve and surplus. Reserve is how much? 40 lakh. Surplus is how much? 30 lakhs. Both put together how much? 70 lakhs. Wonderful. From the above information, you're required to calculate goodwill and capital reserve in the following situations. How many situations? What is the goodwill and capital reserve on the consolidation date? On consolidation of balance sheet. Any problem? Now, wait. You have to understand the question. From the above information, you are required to calculate goodwill and capital reserve in the following situation. What is the situation? On consolidation of balance sheet. On consolidation of balance sheet. Second, if long limited showed the investment in subsidiary. If long limited showed investment in subsidiary at a carrying amount of 104 lakhs, then what to do? If the consideration paid for acquiring 60% stake was 92 lakhs, then what? Now, case 2 and case 3 is understandable. If my investment is 104 lakh, what is goodwill and subsidiary? Sorry, what is goodwill and capital reserve? If my investment is 92 lakh, what is my goodwill and capital reserve? What is this point? From the above information, you are required to calculate goodwill and capital reserve in the following situation. On the consolidation of balance sheet. On the balance sheet date, you're calculating the goodwill reserve. But as on date of acquisition. Tell me one thing. In every question, we did goodwill and capital reserve calculation. When did you do it? While preparing the CBS. While preparing the consolidated balance sheet, that time we calculated. As on which date? As on date of acquisition. People here get confused that we have to calculate the goodwill and capital reserve on the consolidation date. No. During consolidation period only, we will do all the calculations. That time we'll do AOP ka calculation. That time we'll do goodwill CR ka calculation. That time we'll do minority ka calculation. That time we'll do consolidated reserve and surplus. So all the 4 working note, we do on which date? While doing the consolidation. But working note to what we do goodwill and capital reserve, that we do as of which date? Always on the date of acquisition. Correct. So basically what it means is that if 112 lakh rupees was my investment, what is my goodwill CR? If 104 is my investment, what is goodwill CR? If 92 is my investment, what is goodwill CR? So they were 3 cases. What is the date of acquisition? That they have not given. But we know that investment is on date of acquisition and net asset is also on date of acquisition. So do we really need date here? Is date of acquisition term alone not sufficient? More than sufficient. Okay, not okay. Okay. Here why confusion comes is because the way the language is framed, no, that's where people feel confused. Got it, not got it. Okay. How do we do it? Calculation of goodwill or capital reserve. The way we did the above, we did the above calculation, no, in same manner we'll do it. Any problem? No problem. Okay. Particulars. Case 1, case 2, case 3. Now, I'm leaving some lines in the top just to see if there is anything to be written inside. So I'm writing directly here, investment. How much is investment, people? Yes. Investment is how much? In case 1, 112 lakhs. Case 2, 104. Case 3, 92. Without forgetting, please write here. Rupees in lakhs. This 112. Then 104, 92. 104, 92. Any problem? No problem. So from this, we have to minus net asset on which date? On date of acquisition. Net asset comprises of 2 items. Liability side approach, share capital and reserve and surplus. So share capital. Share capital is how much, people? Total share capital of the subsidiary company is 100 lakh. 100 lakh ka 60%. 100 lakhs into 60%. How much it is? 60 lakh. What you can do is, I'm just doing this in inner column for convenience. 60 lakhs. 60 lakhs. Okay. Now with this, what do we do? Add reserve and surplus. Now reserve and surplus is how much? Reserve is 40 and surplus is 30. 40 plus 30 is how much? 70. So here 40 plus 30, the whole multiplied by 60%. So 40 plus 30 is how much? 70. 70 into 60%. How much it is? 42 lakh in the inner column. 42 lakh in the inner column. 42 lakh in the inner column. Tell me the total, please. 60 plus 42 is how much? 102. I'll put 102 here, better. 60 plus 42 is 102 lakhs. Or L can be avoided also. 102, 102. Any problem? Now, we got 102 worth of net assets, but how much have we paid? We paid 112. So we have paid extra or less? Extra how much? 10 lakhs. This is goodwill. Goodwill 10. We have got net benefit how much? 102. How much have we paid? 104. How much extra have we paid? 2 lakh extra you have paid. Goodwill. Here, 102 ka benefit we got, but how much we paid? Only 92. How much less have we paid? 10 less we have paid. This is capital reserve. This is capital reserve. Any big difficulty? This was the exam question for 5 marks. $10 lakh goodwill in first case. Goodwill is 2 lakh in case of second case, and capital reserve of 10 lakh in case of 3. You can write in any format. More than statement format, the presentation, what we did, I feel it is more better. So whether you're doing a separate question like this, or whether you're doing a full-fledged consolidated balance sheet, the format what we have prepared is same. So your mind is trained to do in this manner. You'll have no confusions. So if you try to do different formatting in different place, no, you get confused at which format where I have to follow. So always stick on to one single format. Sorry? I'll show it. Be wrong. This space was not required, so I'm just taking it up. Hey, I love doing this. मजा आता है. Now okay? Can we do next question? Please take illustration 12 of ICI module. Nice question. Not too much masala, but one masala will be there. Illustration number 12. Yes. All the cricketing fans will love this question. Now, ICI never fails to impress students. Now, from the balance sheet, impress I said. दोनों है. देख माता पिता क्या करते हैं, लाड भी करते हैं, मारते भी है. Now, from the balance sheets and information given below, prepare consolidated balance sheet of Virat Limited and Anushka Limited as at 31st March. Right, we will discuss. Though you can't prepare, no. Consolidation means you'll combine both. But who will prepare the CPS? Holding company. So we don't know till date who's the holding company. So you have to read the next line. Question further says that Virat Limited holds 80% of equity shares in Anushka Limited. So who's the holding company? Virat Kohli. Husband is the holding company. So Virat holds, see, you have to be very, other day I gave example. I was very generous. I gave ulta example. In my example was holding Anita ma'am. Who was subsidiary? Myself. In real life, what will be the scenario? This or what I said? Piyush. कपल पे डिपेंड करते भाई, तो कितने भी कपल कैसे भी हो जाए, होल्डिंग कंपनी तेरी पूंछनी वहीं पे होने वाली. Virat holds 80% equity shares in Anushka since Anushka's incorporation. Oh my God. Since Anushka's birth, Virat Kohli was the holding company. What does this indicate? So here, Virat has not acquired the shares from anybody. When Anushka Limited was incorporated, the company would have issued the share capital. So the company has directly issued the share capital to Virat Limited. Okay or not okay? What is the implication behind this? So there is no question of pre-acquisition profit. Very good. So those who have the conceptual hold will answer. There is no question of pre-acquisition profit. In pre-acquisition profit, what happens? The company will issue the shares to somebody else. During that period, whatever the profit is earned, that belongs to the old shareholder. And we have to pay the money. As holding company, we have to pay the money to the old shareholders and buy the profit. Here, there is no question of buying the profits. There is no question of pre-profit. So whatever profit is there from the day one till now, everything is what? Post-profit. So pre-column is going to be 0, 0, 0, 0 here. If that is the case, goodwill capital reserve will come or not come? Goodwill capital reserve will come or not come? Let's wait and watch. Very good. Point, she got it. Others are still thinking, what is happening? Wait, we'll discuss. Balance sheet is given. Share capital 6 lakh, 4 lakh, reserve and surplus is given, long-term borrowing is given, trade payable is given, PP is given, non-current investment. Note number 3 is 320. This is given of Virat. Let's see note number 3. I'm excited to see that. Note number 3, shares in Anushka Limited, which means in this 320, we don't have any other investment. Correct? No. Can Virat Limited invest in share market? Yes. Can they invest in some other company? Yes. They can invest wherever they want to do. So investment here does not mean only investment in subsidiary. All the other investments also will come here. So I wanted to check here whether this 320 is comprising of investment in Anushka Limited, or apart from that, we have any other investment also. So now we are convinced that it is only investment in Anushka Limited. Okay. So can I say this is the money that you have paid? This is the cost of acquisition. This is the cost of acquisition. Okay or not okay? Coming back, inventories, trade receivables, cash and cash equivalent. So far, so good. No problem. Okay. Before we do consolidated balance sheet, what are we supposed to do? Do that 4 working note. Can we start? Let's start. First working note, people. Working note number 1. Calculation of AOP of the holding limited. Of holding limited. Of holding limited. Of Anushka Limited, subsidiary. Of A Limited. What happened, ma?
Sir, the working note से short ही कर सकते हैं.
कर सकते, but मैं करूंगा नहीं ना. Exam you can do whatever you want to do. Here for formatting, for practice, I'll do it full. Particulars, then I forgot the format. Percentage, then pre-acquisition profit, then post-acquisition profit, then total. In exam, can you skip the pre part? Yes, you can skip the pre part. Okay, below that. All reserve and surplus of Virat Limited. All reserve and surplus of Virat Limited. No? Oh my God. I'm so sorry. It is Anushka Limited, 1 lakh rupees. Total, where it will come? We are preparing the CBS as on 31st March 21. When was the acquisition done? Incorporation. Issue shares incorporation. Incorporation date is not given. So this is my closing balance. This is my closing balance. Any pre-acquisition profit? No. So total is how much? Post-acquisition is 1 lakh. Total is also 1 lakh. Post also 1 lakh. Total also 1 lakh. Okay. Next, what are we supposed to do? V Limited. In bracket, holding company. Percentage how much? 60%, 80%. 80% is, oh my God. 80%. Virat Limited is called as holding company, also called as parent company, also called as majority interest. Then others, which is called as minority interest. How much? 20%. Bifurcate. 80,000 and 20,000. So is the total column required? Not required. Is the pre-acquisition column required? Not required. But why did we do? For practice. For practice. Okay. Working note, I forgot what it is. Calculation of goodwill or capital reserve, which is also called as cost of control. COC, cost of control. Format is? Very good. Nicely biated. Particulars, working, amount inner column, amount outer column. How much it is? First item, investment. Investment. The cost of acquisition is how much? 3,20,000 the outer column. Okay. Less net asset. Less net asset on date of acquisition. What is date of acquisition? Date of incorporation is date of acquisition. Share capital on date of incorporation is how much? Share capital on date of incorporation. 4 lakh. 4 lakh into 80%. 4 lakh into 80%. 3,20,000 in the inner column. Now here pre will come. Is there any pre here? No. So pre-acquisition profit is 0. 0. So what is my total net asset? 3,20,000 is my total net assets. No goodwill, no capital reserve. No goodwill, no capital reserve. Can here goodwill capital reserve come or never ever will come?
Can.
It can come when?
Premium is paid.
Okay.
Incorporation तो वो issue कौन से rate पे करेंगे at par at premium at discount if it is at premium it is
Chalo, we'll do premium. I'm just twisting the question. Virat Limited has purchased 80% of 40,000. How much it is? 32,000 shares at rupees 12. At rupees 12. At rupees 12. 10 is face value. 12 is issue price. Difference 2 rupees security premium. This security premium goes where? Reserves and surplus. Reserves and surplus. Where? Pre or post? Post only. Post only. So pre will not come here. So now, what is the amount? I'll just do it here. If it is at premium, what is investment? 3,20,000 multiplied by 12. How much it is? I have changed the question, my dear. I am telling you, it is issued at premium. Anushka Limited is issued at premium. So 32,000 into 12 is how much? 4 lakh? 30. Hello, my dear. Virat Limited is holding how many shares? 80% shares. So 40,000 is the total share. Virat is acquiring how much, or he is getting issued how much for 80% of that. So 40,000 is the total share. Of that 80% is how much? 32,000 shares. He is paying 12 rupee per share. So what is the total payment done by Virat to Anushka? 3,84,000. Okay, not okay. Now this I have to compare with what? Share capital, net asset. So minus net asset. In net asset, what do we have? Share capital. Now what is share capital? 32,000 into 10 rupee, which is 3,20,000. Otherwise, 4 lakh ka 80% you do. Same you'll get 3,20,000. Does it matter? So 3,20,000. Now, pre-acquisition profit, is it there or not there? No. Reserve and surplus will go, sorry, security premium will go where? In reserve and surplus. In reserve and surplus. Which reserve and surplus? Pre or post? Post. Here we record pre. So will anything come here? No. So 320 worth of share, you acquired it by paying 384. So difference is what? Goodwill. Difference is what? Goodwill. Extra you have paid. The premium that you've paid is extra. So for it is investment, no. For the person who's receiving the money, for them it is security premium. But you have paid it. You have paid it by acquiring shares by paying more money. You acquired the shares by paying more money. So anything that I pay over and above the net asset of the business, we call this as goodwill. So goodwill in this scenario will come is what I'm trying to say. Okay, not okay. Okay, not okay. Now, sorry, you think when capital reserve will come. Now, can the shares be issued at discount? Not possible. Only sweat equity shares can be issued at discount. Shares can be reissued at discount, but shares can never be issued at discount. 12th में पढ़ाया, फाउंडेशन में पढ़ाया.
3% वैल्यू से नीचे डिस्काउंट.
ओ हेलो, गलत पढ़ा है तुमने. प्रतीक सर से बड़ा होता ना, ये नहीं जवाब आता. 90% what you're saying is minimum subscription.
अच्छा ओके.
I am asking discount. Now clear? नहीं नहीं, तुम लोग क्लास बाद में लेना इसके. नहीं लेना पड़ेगा. Now this is clear. Can I continue? Okay. Next working note. Hello, हाँ. Working note 2 over. Working note 3 now. Working note number 3. Calculation of minority interest. Particulars. Working amount. Share capital. How much it is? 4 lakh into 20%. How much it is? 80,000. Pre-acquisition profit is not there. 0. Post-acquisition is how much? 1 lakh into 20%. Am I right? All profit belongs to, 1 lakh ka 20% belongs to minority. So 20,000 it is. So what is minority interest now? 1 lakh rupees. This is total minority interest on date of consolidation. On the date of consolidation. Are you able to do it? Tuck, tuck, tuck.
Yes, sir.
Any difficulty you felt so far? People say consolidation very difficult, very tough. So far, have you felt it? No, very good. आगे आएगा बट होने नहीं दूंगा बाबू देख तो टेंशन मत ले कैलकुलेशन ऑफ consolidated reserve and surplus working note number 4 particulars then no I'm working no working okay no problem amount will do it reserve and surplus of Virat Limited how much it is 1 lakh rupees with that what do we add always post acquisition profit belongs to us pre is belonging to old shareholder post will belong to us post is belonging to holding company this is holding a profit this is holding a profit in the subsidiary company to the extent of their shareholding how much it is 1 lakh into 80%. So it is 80,000. So I said working will come. But you said no working. AOP से आ जाएगा? Very good. Okay. With that, we add capital reserve generally, but here there's no capital reserve. So 1,80,000 rupees is my total consolidated reserve and surplus. Any problem? Online people, any problem?
सर अगर वो एग्जांपल आपने जो लिया उसमें कैपिटल रिजर्व आएगा
Sorry?
जो एग्जांपल
I said in that example goodwill came. The above example twisting what I did in premium wala part that goodwill came. Here this was goodwill. So goodwill come in the asset side. Now consolidated balance sheet. Now here what they've done I'll tell you. Listen. This is heading consolidated balance sheet of Virat Limited and its subsidiary Anushka Limited as of 31st March 2001. This is how the heading has to be written. Particulars, note number, amount. Here what they've done is for every item they've given note. When you prepare the CBS in the real life also, you have to give note for every item. But in exam, do you have so much time and luxury to prepare note for every item? No. So my advice is that wherever any item is given single, for example, they give trade payable, 1 lakh and 2 lakh. Only 2 items to be added. Directly record in the CBS without any note. Okay, not okay. If there any adjustment to be done, plus and minus, in that case, do the note for it. Okay, not okay. Because in exam, this is going to take good amount of time. So to save time, this is what we can do. But if you feel that, no, sir, I can write it very fast. I can do note number for all the part of it. You can do it. I will not stop you. But in exam, how much important is to get the answer right? Equally important is to complete the question within the time and manage your time. Now, let's start.
तो जो जिसके लिए हमने वर्किंग बनाया उसके लिए हम सिर्फ नोट लिखेंगे
Yes. Now, consolidated balance sheet of Virat Limited and its subsidiary A Limited as on 31st March 25, is it, or 2001 it is? 2001 it is, okay. We are in 2025, but they're still in 2001. I'm so sorry.
उस टाइम पे शादी भी नहीं है
तू पैदा हुई थी?
नहीं मैं विराट का
Oh my God. You're thinking about them. Particulars.
No.
Note number, then amount. In bracket, rupees. First part. Equity and liabilities. First item, shareholders' funds. Below that, A, share capital. You can write note also, or you can just write the amount. Always here the share capital of which will come? Only holding company. Why does the share capital of subsidiary does not come? Yes. So here what happens is that 80% of 4 lakh is how much? 320. So 320 on liability side capital is knocked off against 320 on the asset side investment. 320 I have liability side capital and investment I have 320. So this 320 is knocked off. How much is remaining 20%? 80,000. 80,000. This 80,000, what we do is we remove from share capital and add it where? 80,000 in the minority interest. So it is coming on liability side, but the heading is changing. From share capital, we're moving to minority interest. Okay, not okay. That way, I'm abolishing the entire share capital of the subsidiary company. So what is left? Share capital of holding company, which is 6 lakh. Next, B, reserve and surplus. You can give note number. Yes. This can be your note. You can't write working note 4. So basically in exam, what you're supposed to do is, when you prepare note 1, note 2, note 3, note 4, no, in that, this instead of taking this working note, take that as note number 1 and go. That is better. Got it, not got it. So it becomes a note also and working note also. Whereas working note 1, 2, 3 will not go anywhere in your note. Minority interest will come. Working note 3 will come. So working note 3 also you can make a note directly. You want to see working note 3? Okay. This is working note 3. Sorry? 2 we do it. So this is note 1. I'm writing in bracket. We have created working note number 4 if I'm not wrong. What is it? How much it is? Reserve and surplus. 1,80,000. Very good. Then minority interest is the second part. 2 minority interest. This is note 2, but as per our thing, it is working note number 3. How much it is? Just copy paste the data. 1 lakh rupees. Very good. Third, non-current liability. Is there any current liability?
Yes.
Yes. So first do non-current liability. Under that, long-term borrowing. Long-term borrowing. See, with this long-term borrowing, if there is anything else to add and minus, then you can do note. Otherwise, you can just add these both directly. 2 lakh plus 1 lakh, how much it is? 3 lakh. 4 is current liability. In that, the first item is trade payable. Trade payable. Is there any adjustment to be done with trade payable? Now it is not there. In future, it will come. We have certain contra entries to be knocked off. Now nothing it is. So I'm just adding both. 1 lakh plus 1 lakh, how much it is? 2 lakh. How much is total people? 13 lakh? 80,000. Any difficulty? Next, part number 2. Assets. In that, the first item is non-current asset. Non-current asset. Under the first item is property, plant, equipment, and intangible assets. Under that is PPE. Any adjustments to be done with that? No. So just add 4 plus 3, how much? 7 lakhs. We have any goodwill or capital reserve? No. So directly non-current investments. Will it come? Not come. Why? Because non-current investment is knocked off against the share capital. So directly current assets. Not required. 2 is current asset. In current asset, we have 3 items: inventory, trade receivables, and cash equivalent. Inventories, trade receivables, cash and cash equivalent. Can you write short form like how I'm writing in exam? Not required. No. We have to write full form only. You can't do like that. 160 plus 2 lakh is how much? 3,60,000. 80 plus 140 is how much? 2,20,000. And 40,000 plus 60,000 is how much? 1 lakh rupees. How much is total? 13 lakh? 80,000. Matching, not matching? Perfectly matching. With this, your level 1 question over. Level 1 question over. What is level 1 question? In AOP, you had only one item, which is reserve and surplus. No other adjustments. So basic AOP, basic goodwill and what is it called? Capital reserve calculation, minority and consolidated reserve and surplus. So we will now take a break of 5 minutes. We'll come back and do the next adjustment, which is called in my language as time adjustment. Okay, not okay. So we'll take a quick break of 5 minutes. Thank you, people. Yes, people, welcome back from the break. So let's continue. Guys, now that you've done illustration well, and before I go to the next part, I just want to tell that in this particular question, people, for every single item, they've done the note. See, general reserve of holding company, add general reserve of subsidiary company. the 80% part. Long-term borrowing, add long-term borrowing of subsidiary company. This is what they've done it. You can do this provided you find time in exam. But if you don't find this time in exam, I'm telling, do that notes wherever you have a lot of adjustments, plus and minus to be done. If there is only two items to be added, one of holding and one subsidiary, if possible, avoid it. If time permits, do it, I have no problem. But if time does not permit it, it is important more than showing that note number, adding them and showing in the CBS is main important thing. So are you able to understand how to present it? Chalo, great. Now, let's go to example 13 people. In this, we're going to do some adjustments in AOP. So far the AOP that we have done is basic AOP, very, very basic AOP. Now we're going to do some adjustments in AOP. So I've taken one example to put the concept in your head. It says that H Limited acquired. He did not get the shares issued. In case of Virat and Anushka issued the shares to Virat. Here it is acquiring. Acquired 80% shares of S Limited on 1/7/23 for 140 lakhs, which is 1 crore 40 lakhs. On date of acquisition, share capital of S Limited was 100 lakhs. On 31/3/24, balance in reserve and surplus was 30 lakh in books of S Limited. On 1/4/23, balance in reserve and surplus was 10 lakh of S Limited. Calculate goodwill, capital reserve, and minority interest. These two I can't calculate without doing AOP. So AOP, goodwill CR, minority interest, all three we have to calculate. When such questions you get, always draw the timeline. Always draw the timeline. So along with me, all of you, please draw the timeline. I'll do it. Now tell me, people, in this question, what is the financial year? Is it April to March or Jan to December? August to March? Yeah, my heart attack. It is April to March. April to March begins with 1/4/23, ends with 31st March 24. Okay. 1/4/23 ends with 31/3/24. Okay. H Limited acquired 80% share of S Limited on 1/7/23. 1/7/23. Date of acquisition is not beginning. Now the date of acquisition is somewhere in middle. Somewhere in middle. Purvi, up to the previous classes or up to the previous questions, always the date of acquisition was beginning of the year. Now we are getting some masala into it, where the date of acquisition is going to be somewhere in the middle of the year. Is it a necessity that whenever a company is acquiring the shares, they have to acquire only on 1/4/23 or 1/4 of any year? Not necessary. They can do the deal anywhere in between of the year also. So now here the company has acquired the shares on 1/7/23. This is date of acquisition. This is date of acquisition. Okay, not okay. Please tell me, goodwill and capital reserve has to be computed on 1/4/23, that is beginning of the year, or should be on 1/7/23, date of acquisition. Always 1/7/23, which is date of acquisition. So I need to calculate goodwill or capital reserve here. Yes or no? For me to calculate goodwill and capital reserve here, what do I need? What do I need? Investment I need. The investment is given, which is 140 lakh. Any problem? 140 lakh is given. What do I need next? Net asset I need. In net asset, what do I need? Share capital and which reserve and surplus? Pre or post? I need pre-acquisition profits. Pre-acquisition profit. Share capital, no problem. Because whatever the share capital in the beginning of the year, same thing is going to be on 1/7/23. Same thing is going to be at the end of the year, unless we have new issue of share or bonus issue is coming. Except in that scenario, share capital will remain even throughout the year. So here I have no problem with share capital. Share capital is absolutely fine. The problem comes in pre-acquisition profit. My question to all of you, what is the pre-acquisition profit? Before that, let's put the data first. What is the data telling? On this day, I have purchased the shares. What is investment worth? 140. How much shares have you acquired?
80%.
80% shares are acquired by paying 140 lakhs, 1 crore 40 lakhs. Share capital is 100 lakhs. Share capital 100 lakhs. So 100 lakhs into 80%. Okay, this much also I got it. Then they're telling that 30 lakh is reserve and surplus at the end of the year. So total reserve and surplus at the end of the year is 30 lakhs. Any problem? No problem. They're telling on 1/4/23, beginning of the year, the reserve and surplus was 10 lakhs. Reserve and surplus in the beginning of the year. Reserve and surplus in beginning of the year is how much? 10 lakhs. Okay. My question to all of you. How much is your post-acquisition profit? How much is your post-acquisition profit? Understand this is 10 and this is 30. What is your post-acquisition profit? ऐसे मेरे को नहीं देखना है. मेरे को जैसे देखना है वैसे ही देखना है. ऐसे वैसे नहीं देखना है.
The post price.
You calculate and tell me. What is the post-acquisition profit? 20 lakhs is post-acquisition profit. You tell me the final answer.
Post acquisition मतलब HV limited का नहीं ना.
Post-acquisition means what we have learned in last 3 classes. I want final answer.
12 lakh. 7.5 lakh. Acquisition 7.5 lakh. And
Post is 7.5 lakhs. And pre is? Very good. Okay. Others. Whoa. Tell me the final answer. No, I don't want any hanky-panky answer. I want the final answer. How much is pre? How much is post? What? Yeah, 3 classes done on this. Still you're struggling with AOP. Oh my God. First, all of you, quiet. Believe in yourself. Take a deep breath. We can do it. Take a deep breath, all of you, properly. Slowly. Now, don't get confused. Aram se think. What do I need? I need pre-profit, post-profit. I want pre-profit, post-profit. Pre-profit means what? Profit from the beginning to the date of acquisition. And what is post-profit? Profit from date of acquisition to the end of the year. Avlada. Aram se recalculate. Don't strain. Don't panic. Very easy question. Simple question. Let me tell you, this has got nothing to do with accounting. This is common sense and basic mathematics. Nothing to do with accounting. Common sense, by birth you've got it. Max till 10th and foundation have done it very well. Pre and post किसका करते बेटा AOP में? In AOP you do always pre and post of which? Pre and post have you ever done for holding company? Your first question was, do we do pre and post for holding or not? Have I ever in my life taught you that we have to do pre and post for holding company? In the consolidated reserve and surplus, working note number 4, we took the entire holding company P&L as it is. We never did pre and post. Pre and post is always done for subsidiary. And this information, what is seen on the screen, is only subsidiary. So I'm asking only pre and post of subsidiary. That's all.
Thousands.
You don't ask me the answer because anyways I'm going to do it. I want to know from you. Do it, Aram se. I don't want the answer like this. You tell me the final answer now. 12 lakh, post, pre 4 lakh. Okay. Same 12 and 4. Okay. No minusing my investment. I'm just asking what is pre and post. I'm asking total pre-acquisition profit, total post-acquisition profit.
If that is the same thing,
What?
if it is
Normally means in AOP, what is my total pre-profit, total post-profit? Final pre and post-profit, which I have to bifurcate it in the percentage. Wrong. Give up. I'll teach. Sorry? Okay, one answer I got 15, 15. 15, 15. 15 pre, 15 post. No problem. He gave an answer. No, you give me 3 options. Let's play Kaun Banega Crorepati. Come on. 10, 20. Very good. 2 answer I got. 10, 20. 15, 15, 10, 20. 2 more options. Come on. क्या क्वेश्चन डेटा तो पूरे यहाँ पे दिया ना मैं people are not believing me. You said 10 and 20.
3, 10 post.
10, 20. 15, 15. 2 answers I got, people. 4 and 12. 3 options I've got it. Come on, people. One more answer we give. Ningulu melala morukodi. Come on, let's play. 5 and 15. Oh my God. Oh my God. In this one is correct. Remaining 3 is wrong. Overconfidence. Overconfidence. Now, oh, all give up, give up. No, bas. हो गया. अब my turn. All of you, all of you. Sing is king. Sing is king. Now, listen, listen, listen. Shh. God, finish, finish.
So who experienced this, sir?
He applied common sense. Date of acquisition. Now, listen, listen. Shh. Date of acquisition. Okay. Date of acquisition 1 July 23. 1 July 23. Now, listen to me very carefully. The profit during the year we have to find out. For that, what is required? Closing profit I want and opening profit I want. So, when you started the business in the current year, what is your accumulated profit? When you started the business in current year, when the subsidiary company started the business in current year, what was the accumulated profit? 10 lakh was the accumulated profit. By the time they came to end of the year, the profit became 30 lakh. So profit during the year got increased by how much? Very good. So one thing is very clear. During the year, the profit that got increased is 20 lakh rupees. Profit during year is 20 lakhs. So 10 lakh plus 20 lakh is equal to 30 lakh. Any problem? No problem. This is my first step. This is my first step. Second, I want to know what is pre-profit and what is post-profit. What is pre-profit and what is post-profit? Let me talk about pre-profit. I'll do proper steps later. I'm just telling the logic. 10 lakh rupees profit. 10 lakh rupees profit. Who earned? Subsidiary company. During what period? During the olden period. During the olden period. During this period, who was the shareholder? Was the holding company shareholder or the others were shareholders? I mean, old shareholders were the shareholders. Am I correct? So this 10 lakh profit belongs to whom? Old shareholders. Okay, not okay. This is one pre-profit 10 lakh. 1/23 is the date of acquisition. This date to this date, will you call pre-acquisition or post-acquisition? Still, this is pre-acquisition. My point is, during this period, 1/4/23 to 1/7/23, what was the pre-acquisition profit for 3 months? So 20 lakh is the profit for 12 months. 20 lakh is the profit for the entire year. Year means 12 months. Then for 3 months, how much is the proportionate profit? What do we call this method as? Vegetable vendor technique. All your mathematical formulas derived from vegetable vendor technique, not from any mathematical guru. One second, one second. You know vegetable vendor? Wait, shh. I'm coming. Wait, shh. I will. She gave fees to me, not all of you. Wait. ऐसे की ना, Ayanch is studying in SSVM Kids Casa, LKG. Now they're teaching what is January, February, March, April, May, June, July. I'll go and put you there. Your fees I will bear. But I'll not allow in C enter now. I'll put in LKG and come. Sir, wait. Shh. Usko patti baat. Now, we call this as vegetable vendor technique. In your 10th standard, up to 10th standard, we call this as cross multiplication method. This is also called as unitary method. 20 lakh is profit for the current year, and the current year has got 12 months. For 3 months, how much? Why 3 months? Because from 1/4/23 to 1/7/23, until the acquisition is done, this profit belonged to old shareholder. So this period also is called as pre-acquisition profit. This is also called as pre-acquisition profit. 3 months, April, May, June, 30 June or 1 July, both are same. This is called as pre-acquisition period. So this is also pre-period and this is also pre-period. This is pre-period of the earlier years. This is the pre-period of the current year. Got it, not got it? So please tell me, for 3 months, what is the proportionate profit? 5 lakhs. So 10 lakh plus 5 lakh. What is my pre-profit? 15 lakhs. Now, I want to see, Lakshita, I want to see the profit after acquisition, which is called as post profit. From 1 July 23 to 31/24, how many months? 9 months. So I want to know what is 9 months profit. 20 lakh is equal to 12 months. For 9 months, how much? 15 lakhs. Post is 15 lakh. Post is 15 lakhs. Now listen. You should have some problem here. You should have some problem here. What is your problem? If you are sensible person, if you have common sense, if you are sensible, if you have common sense, you should have a problem with this calculation. You should definitely have a problem with this calculation. No. if you're having common sense, if you're sensible, you should have some doubt here. How is this possible, sir? You should ask. But how? What? How you have to do? What? How are we talking about? Here, we are solving this answer by taking one assumption. If that assumption is not there, then gone. So what is the assumption that we have taken here? Lovely. Yes, hit it. Bullseye. Clap for him. How on earth can the profit be uniform all throughout the years? Tell me one thing. 20 lakh is profit for 12 months. What is profit for 1 month? What is profit for 1 month? 20 lakh by 12. Please do it. 20 lakh by 12. How much it is? 1,66,667. Am I correct? Is it possible that every month you'll have same profit? No. Some month the profit could be more. Some month it will be less. Some month it will be more. Some month it will be less. Since in the question they have not given monthly profits, I'm not able to take the monthly profits. In real life, you'll go to your tally software and you will take the actual profit from 1 April to 30 June or 1 July. I'll get the actual profit from the accounting software. But here we don't have monthly profits. So the assumption that we're doing here is that we believe that the profits are earned uniformly. Every month in the year, we have earned same profit of 1,66,667. With that assumption, we solve this answer. Got it? Not got it? Now, क्या आया था?
But नहीं इसको multiply किए मैं.
Because you thought July is August, na? That's why you didn't get the answer. Now, got it? Not got it? Now, segregating pre and post. Segregating current year profit in pre and post is important, not important. It's very important. Why? Because if you do not do the segregation proper, your pre-profit and post-profit will be wrong. If your pre and post is wrong, your goodwill calculation will be wrong. Minority interest will be wrong. Reserve and surplus will be wrong. Entire balance sheet will be wrong. So if AOP goes wrong, what will be your mark? Zero. Now to understand how important AOP is. Very, 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 very important. Hence the logic. Okay, not okay. Now, if the date of acquisition happens to be somewhere in the middle of the year. Now listen, I've given a note also. If the date of acquisition happens to be somewhere in the middle of the year, then profit from the beginning of the year till date of the acquisition needs to be adjusted, and that will be called as pre-acquisition profit. And profit after date of acquisition till the end of the year is called as post-acquisition profit. Okay, not okay. Hence, in the AOP of the subsidiary company, we shall adjust the pre-acquisition profit. We have to do adjustments for pre-profit and post-profit. For both pre and post, we have to do adjustment. This adjustment is called as time adjustment. This is called as time adjustment. Purvi, what is it called as? Time adjustment. Now listen, what I've done. Observe. This is AOP. You will do it, I'll not do it. Just observe first, then do it. Particulars. Percentage. I want pre-acquisition profit. What is pre-acquisition profit? Profit up to 1723. Means whatever the profit is there from the beginning up to I want 1723. Any problem? Profit in the beginning is how much? 10 lakh. During their profit is how much? 5 lakh. So up to 1723, what is the profit? 15 lakh. This is what you have to present now. Okay, not okay? Okay. Now here, all reserve. Opening balance is how much? 10. Opening is 10. This is pre. What is post now? Post is what? Generally, it is supposed to be from date of acquisition to end of the year. But I've taken 20 year. 20 year means what? It is from 1/4/23 up to 31/3/24. I want post profit from 1/7/23 to 31st March. But here I've taken full 20. Full 20 is what? For the entire 12 months. Apana, this 20 lakh rupees is profit for 12 months. From that, I need to eliminate profit for first 3 months. So that I'll get the profit for the remaining 9 months. That's what I've done. From 20 lakh, I'm removing first 3 months ka profit, which is 5 lakh. So what is my post profit? 15 lakh. And this I'm adding where? I'm adding in the pre-acquisition period. So April to June ka profit. April to June ka profit, it is included in post. So I'm removing from post and adding in the pre part. Okay, not okay. So 10 lakh is opening balance in the beginning period. Then add 3 months ka pre-profit. So total pre-profit is how much? 15 lakhs. And post is how much? 15. Got it, not got it. This is one way of doing it. I have also given an alternative method. If you find comfortable with this, you can settle with this. If you're not comfortable, you can go with this calculation. I'm giving an alternative AOP. Alternative. I want pre-acquisition profit. What is pre-acquisition profit? Pre-acquisition profit is from the beginning up to date of acquisition. Beginning is how much? 10 lakhs. That is on 1/4/23. The pre-profit is 10 lakhs. With this, I want the profit for April to June. So what I'm doing is add April to June ka profit. How do I do it? 20 lakh into 3/12. How much I'll get? Directly 5 lakh you put it here. And remaining is how much? 15 lakh. How did I get this? 20 lakh into 9/12. For remaining 9 months, put 15 directly in the post profit. So there's nothing to be added and subtracted. I'm taking the data and putting in the respective columns. Here what I did, I put full 20 in the post. Then 5 I removed here and then 5 I added here. If this is complicated, the second option is what you know. The post profit is there. Sorry, the current year profit is there at 20 lakh. That pre-part record separately here, post-part record separately here. Game over. Got it, not got it. So total is how much? 15 lakh, 15 lakh. Done, not done. Any difficulty, any doubts? Soma, any doubts? Karna?
No, sir.
Can you do it? I'll give 2 minutes of time. Do it fast. Finish the AOP part. Till this only. Till this only. Yes, I'll show the timeline. Done? Do the diagram. It will help you during the revisions. The question said that we have got 80% share. So 80% is of holding companies, remaining 20% is with minority. So break into two parts. 15 lakh ka 80% is 12. 15 lakh ka 20% is 3. 12, 3, 12, 3. Sorry? Sorry? My suggestion is do this alternative. This is better, is what I feel. This is better. There's no confusion of plus and minus extra drama. Very simple it is. This is the opening profit, 10. This is the during the year profit, 20. Which I'm split in pre-part. Pre is 3 months. Pre is 3 months. Post is 9 months. Keep it very simple.
10, 20, 50 extra. Or
If that is comfortable, do that. I have no problem. That's why I give both. Whichever makes you comfortable, you can follow. I have no problem. Both are same. Doesn't matter. Whatever is comfortable for you. Whatever is comfortable for you. Done? Now, what is next? Calculation of goodwill and capital reserve. This 80% shares that you've acquired, how much have you paid for it? The question says that we have acquired this for 140 lakhs. So 140 lakhs. Investment is 140 lakhs. Compare with the net asset. Net asset on the date of acquisition. So what is the share capital on the date of acquisition? 100 lakh is the share capital of subsidiary company. In that 80% we have acquired. So 80% of capital belongs to us. 80% of the net asset belongs to us. That is share capital part. Will I take pre or post year? We are calculating this on the date of acquisition. So it will come pre-profit, pre-profit. So how much is pre? 12 lakhs. It's coming from a AOP. So pre of holding is 12%. Sorry, 80% ka 12 lakh rupees. Pre-acquisition profit, it's coming from AOP, 12 lakh rupees. Which one? This one? Done? Okay. Total net asset you've got worth how much? 92 lakhs. 92 lakhs. Paid is 140. Paid is 140. Have you paid more or less? I'm getting benefit for 92, but I paid how much? 140. Extra how much have you paid? 48 lakh. That is called as goodwill. That is called as goodwill. Done? Next is minority interest. I want three data. Share capital on the date of acquisition, pre-profit and post-profit. Right? Share capital is how much? 100 lakh is the share capital of the subsidiary company. In that, 20% capital is held by minority. So 20 lakh is the capital of minority. Pre and post minority profit is coming from AOP. How much it is? 3 lakh and 3 lakh. 3 lakh and 3 lakh. It is coincidence that both luckily came out to be 1550. So pre is 3. That is opening. Look at this. Opening. Look at this. I've written here also. Opening plus April to June. And this is July to March. Post. So this is pre. This is post. So total minority interest is 26 lakh. 26 lakhs. Not required because the question is asking only to calculate the goodwill CR and minority interest. You can't do consolidated reserve and surplus because they have not given the reserve and surplus of the holding company. So we can't do it. We always have to calculate goodwill and capital reserve on the date of acquisition. Okay or not okay? So my question to all of you, when do we generally do time adjustment?
So the middle of.
When the acquisition is happening somewhere in the middle of the year, that time the time adjustment has to come. When the time adjustment will not come. Very good. In the beginning of the financial year or the end of the financial year, if date of acquisition is happening, then time adjustment is not required. Okay, not okay. Reserves and surplus of?
On the date of acquisition, reserves and surplus.
Correct. For example, here in this question, had they given you the reserve and surplus as on 1/7/23 itself. So up to 1/7/23 ka profit is given. Take the difference, that becomes the post profit. So 1/7/23 ka profit given. Let's say that is given is 15 lakh. Ending is how much? 30 lakh. I'll just put it here. Once again, instead of giving 10 lakh in the beginning, they didn't give this 10 lakh. Directly they gave the reserve and surplus as on 1 July, date of acquisition. How much it is? 15 lakh. End of the year, how much it is? 30 lakh. So what is the post profit? 15 lakhs. So in this case also time adjustment is not required because in this time adjustment is already done by the question and given to you. They can give you 10 lakh also, 15 lakh and 30 lakh. Still no need of time adjustment because I have what is the pre-profit up to date of acquisition. If I have pre-profit on the date of acquisition, no need to do any time adjustment. Pre-profit is given somewhere else, date of acquisition somewhere else, then in between ka period ka profit we have to find out. So for that time adjustment has to be done. Okay, not okay? Online people, okay, not okay?
Okay, sir.
Okay, fantastic. This was your level 2 question. Question where you have to do the adjustments for the pre-profit and the post-profit. We call it shortly and sweetly as time adjustment. Now we are going to level 3 question where revaluation ka concept will come into picture. Now revaluation ka concept I have broken down into 3 parts. Example 14, 15, 16. Today I'll be completing the class with example 14. With example 14 I'll be done. Here I'm going to teach you what is revaluation, but there is no depreciation given. There's no impact of depreciation in this. Like that, the question has been flipped. I'm keeping it very, very raw and simple. With this, I'll wind up my today's discussion. The question says that H Limited acquired 80% shares of S Limited on 1/12/23 1/12/23 for 10 lakh rupees. So 10 lakh is my cost of acquisition. Cost of acquisition. When did I acquire? What is date of acquisition? 1/12/23. On that date, the share capital on that date, which date? On the date of acquisition, share capital 9 lakh, reserve and surplus 5 lakh. I have reserve and surplus on the date of acquisition. Do I need to do the time adjustment? No. Since the date of acquisition and the date of reserve and surplus is same, date of reserve and surplus and date of acquisition is same, no time adjustment is required. That also note I gave. Appreciate me. Clap, clap. She's sleeping. Now, listen, very, very important. Now, as on 1/12/23, the market value of the land of S Limited is higher by 50,000. Calculate goodwill and capital reserve. Now, let me put this in a nice way. If I may ask you, what is the share capital of the subsidiary company? What will you say? What is the share capital of the subsidiary company?
9 lakhs.
9 lakh. What is reserve and surplus of subsidiary company? 5 lakh. I'm opening the balance sheet here. This is balance sheet as on acquisition. When is acquisition done? 1/12/23. 1/12/23. Share capital is 9 lakh. Reserve and surplus is 5 lakh. I'm assuming that there is no other liability. Total is how much? 9 plus 5 is how much? 14 lakh. Asset also will be 14 lakh. I have no breakup of any other asset. So I'm assuming, for convenience, that the value of the land is how much? 14 lakh. Land, 14 lakh. This is as on date of 1/12/23. Did the question mention that this land we are purchasing today? No. So this land we have purchased somewhere in earlier years. Last year, last to last year, previous year, somewhere in the earlier years it has been purchased. My question to all of you, is this 14 lakh rupees the purchase cost of the asset or it is revalued figure? It is the purchase cost of the asset. Because in accounting standard, we always follow historical cost concept. Means at what price we have acquired the asset, same price will continue to carry forward in the balance sheet. Same price will continue to carry forward in the balance sheet. This I have been discussing since 11th standard. So this is my historical cost. Means when I purchased this land few years ago, that time the cost of the land is 14 lakh. Okay, not okay. Now, today if I see the land value, it is 14.5 lakh rupees. Means the value of the land is increased by 50,000. The value of the land is increased by 50,000. Any problem? No problem. Now we are calculating goodwill and capital reserve. Means on the date of acquisition, I want to know the money that I've paid. Have I paid more or less? I want to know what is the money that I've paid and what is the worth I'm getting. I want to know what is the money that I've paid. The money that I've paid is how much? 10 lakh rupees. For paying this 10 lakh rupees, what am I getting in return? What is the worth I got in return? I want to see. So what is the worth that I'm getting in return? Net asset. If I give 10 lakh rupees, I'm getting net asset. Whatever is the net asset of the company, of that, how much is net asset belonging to me? 80%. Okay, not okay. Now, listen to me very carefully. I'm doing good calculation of goodwill and capital reserve. What is the investment amount, people? 10 lakh rupees. I pay 10 lakh rupees. What am I getting in return? Minus net asset. I'm getting net asset. Net asset can be computed using two methods. One, liability side approach. Second, asset side approach. Here, asset side approach, if you take it, what will I get? So from total asset, if I minus external liability 0, what is my net asset? 14 lakh. Or if I go with liability side approach, add these both, it is my same 14 lakh. Okay, not okay. So in short, 14 lakh is the net benefit that I'm receiving. I'm breaking this in two parts, share capital and pre-acquisition profit. What is share capital? 9 lakh into 80%. How much it is? 7 lakh 20,000. Okay. What is my pre-profit? Sir, this is my pre-profit because today is the date of acquisition. Today ka profit is given. Next day ka business is not been done. So today is the acquisition date. Today is the balance sheet date. So there's nothing in post. So entire 5 lakh is my pre-profit. In that 5 lakh rupees, 80% belongs to old shareholder, which holding company has to pay to acquire the shares. How much it is? 5 lakh into 80%. How much it is? 4 lakh rupees. So what is the total net assets? 11 lakh 20,000 is the net asset. 10 lakh rupees is the amount that I paid. So we are telling that, so 10 lakh I paid and I'm getting the benefit of 1120. So what is the extra money that you've paid? No. 120 is not the extra money paid. 120 is correct. But look at my question. I asked how much extra money paid. The extra money we didn't pay. We pay less. How much less we paid? 1,20,000 we paid. Sorry, 1,20,000 we benefited. This is called as capital reserve. So I'm telling that in this transaction, sorry, I'm not telling, you're telling that in this transaction, we have earned a profit of 120 because we're getting 11,20,000 worth of net asset by paying 10 lakh rupees. So you're telling that the profit that you've incurred or earned out of this transaction is 120. You're telling, I'm not telling. Do you feel this is correct? What is pinching you inside? I don't want revaluation. I want to know what is pinching you inside. What is hurting you inside? I want in layman language. I don't want the word revaluation either. Don't tell me the word revaluation. I want to know from you what is pinching you from this calculation. Okay. So what have you taken? Now, the old net asset is worth 14 lakh. Whether you do asset side approach or whether you do liability side approach, the old net asset is how much? 14 lakh. Land ka value 14 lakh. Old rate. Share capital plus reserve and surplus 9 lakh plus 5 lakh is 14 lakh. Is it the net asset at present? Is it the benefit that I'm going to get today? If I sell the land today, will I get 14 lakh? No. How much will I get? I'll get 14 lakh 50,000. But you have considered net asset as how much? Only 14 lakh. So you have undervalued your net assets. Is it right? Today, when I'm calculating my goodwill and capital reserve, I want to know 10 lakh I paid today. I want to compare this 10 lakh with today's net asset, the real net asset. When I pay this 10 lakh rupees, what am I actually getting? That net asset I should take. But here the net asset what you have taken is 9 lakh plus 5 lakh is how much? 14 lakh, which is the old net asset. I'm comparing 10 lakh today's payment with the old value, old product. I'm comparing 10 lakh rupees with the old product. I did not pay 10 lakh for the old product. I paid 10 lakh for the new product. So what is my total worth of the business today as on the date of acquisition? You are calculating goodwill and capital reserve on the date of acquisition. You are calculating goodwill and capital reserve on the date of acquisition. So you should take the actual value of the asset and liability on the date of acquisition. So don't you think that all the asset and liability which is given on the date of acquisition, if it is the old value, you have to upgrade that to new value. If I have old liability, upgrade to new liability. If I have old asset value, upgrade to new asset value, because that is a real picture. Accounting standard says that you don't revalue the assets. You carry forward all the assets at the historical cost. Accounting standard said, okay. But I can't apply the accounting standard blindly because if I apply that blindly, if I compare my investment with the old net asset, it will not give me true picture. It doesn't give me true picture. I have to compare the payment that I've done. The cost I have to compare with the today's net asset. Today, what is the worth of the company? That I should see. I should not see the old net worth of the company. I want to see what is today's worth of the company. So in today's worth of the company, what is missing? Today's upgraded land value is missing. So that we have to add it. Yes or no? We have been studying this since 12th standard. Partnership topic. We do revaluation of assets. What is the entry for revaluation? Forget partnership, what we learned in wealth and foundation. I'm talking generally. What is the entry for revaluation of asset? Upward revaluation is. Very good. Land account debit 50,000. To revaluation 50,000. Yes or no? This will get added to your asset and this will get added to your reserve and surplus. When I calculate net asset using asset side approach, then with the asset 14 lakh, I have to add this. If I'm going liability side approach, I will add this 50,000. In any case, you have to add only 150,000. Out of emotion, don't add 50 plus 50 and make profit 1 lakh. This 50,000 rupees you will add on the asset side approach route. If you're coming through the route of asset side approach, this 50,000 will add it to the existing net asset. So what is the existing net asset of the? What is the existing net asset from the asset side approach? Land is 14 lakh. Now add revaluation how much? 50,000. So what is total now? 14.5 lakh. By chance, if you're using route of liability side approach, in liability side approach, what is your share capital? 9 lakh. Reserve and surplus 5 lakh. But now you added one more entry. What is the entry? Land to revaluation. Revaluation reserve will get added to your reserve and surplus. So plus revaluation reserve how much? 50,000. So 14 lakh plus 50,000 is how much? 14.5 lakh. So the debit part of the journal entry is gone here and the credit part of the journal entry is gone here. So when you add, you'll add only one place. Okay, not okay. Okay. Now we have to do this addition where exactly? In our working note 1, 2, 3, 4. Where do you do this adjustment?
One. AOP method.
If you do an AOP, no, everything will get sorted. If you don't do an AOP, then I have to do separately where in the working note too. Separately for minority interest, separately here and there. So it'll be time consuming. It'll create confusion and chaos. So I've created a format in such a way that we do all the adjustments of reserve and surplus in AOP itself. And from there only we pick and choose the data and put in working note 2, 3 and 4. So where are we going to do adjustments? AOP. In AOP, if I correct it, everything is over. In AOP, what do we reflect? Do we reflect land value or do we reflect reserve and surplus? Reserve and surplus. So I will add this part in the AOP and leave it. This will take care of everything. This will take care of everything. Okay, not okay. So what we have to understand here is that whenever the question says that there's a revaluation, should we give the effect of revaluation or not? Yes. Why are we supposed to give the effect of the revaluation? If I don't give the effect of revaluation, then the amount what I paid 10 lakh, I'm trying to compare that with the old value, which does not make sense. I have to compare the amount that I paid with the latest value. So to get the asset at the latest value, we have to give the impact of revaluation. Whether it is upward or downward revaluation, I don't mind it. But whatever is the revaluation, give the effect of it. Once you do the revaluation, now the asset what you get, the liability what you get is the latest value. So now the net benefit I compare, which is the latest net benefit, I compare with the latest payment. So what do I get? Latest goodwill I get. Okay, not okay. Now here, I was very wise in choosing the type of the asset, land. I didn't put a building. I didn't put a machinery because those are depreciable asset. Land is appreciable asset. And we never do any appreciation because it is against prudence concept. Very good. I don't do any appreciation in the asset. This 50,000 appreciation, what we did is a genuine appreciation. For this, we'll have evidence. We will take certificate from the engineer. From the chartered engineer, we get the certificate. So when I'm doing upward revaluation, I provide evidence to it. I substantiate this 50,000. Got it, not got it? Okay. Now can we work out this question? Now listen to me. I given a note also. Revaluation of assets and liabilities of the subsidiary should be done on the date of acquisition. Revaluation should be done on the date of acquisition. Because the goodwill or the capital reserve is computed by comparing the purchase consideration with the fair value of the net asset existing on that date. On which date? On the date of acquisition. So you always compare the purchase consideration with the fair value of the net assets. If you remember, I told you in all the questions that we did above, I gave one sentence. What sentence I gave? Assume book value is equal to fair value. Assume book value equal to fair value, which means all the asset and liability what I gave you, it is at the fair value. Means what? If there is any revaluation, after revaluation, I gave you the balance sheet. Got it? Not got it. So that's why I made the statement everywhere. Assume the book values are equal to fair value. Fair value represents the today's latest value, latest asset, latest liability, latest net asset. But in this question, in the 14th question, the balance sheet data is the book value. In that, what is not there? Revaluation not there. Fair value is not there. So you are computing the fair value. Okay, not okay. So I gave the logic behind why are we doing the revaluation also. Can we do the working now? Let's do it. First working note AOP. Working note number 1. Calculation of AOP of holding company. Of holding company. Of subsidiary company. Format please. Particulars. Then percentage. Pre-acquisition profit. Then Post acquisition profit, then total. Pre-profit and post-profit is also called as capital profit and revenue profit. Very good. Now, all reserve and surplus, which is old reserve and surplus. Yes or no? How much it is? Total, how much it is? Now here, 1/12/23 is the date of acquisition. Reserve and surplus is given on the date of acquisition. Market value is given on date of acquisition. Everything is given on the date of acquisition. Which means today I am acquiring. Today itself I am preparing the consolidated balance sheet. Did I do any business in the post period? No. So post profit is 0. So what is my pre-profit? 5 lakh rupees is my pre-profit. Post is 0. Total is 5 lakh. All this calculation is happening on which date? 1/12/23. 1/12/23. All this is happening on 1/12/23. On 1/12/23. Any problem? Is this reserve and surplus representing true reserve and surplus? No. This is old reserve and surplus. What is the thing that is not what do you call it? Included in this? Revaluation reserve is not included. So I have to add revaluation profit. Add revaluation profit. If it is loss, I will minus. Profit means I will add. How much it is? 50,000 rupees. Now add 50,000. For this, I'm preparing one working note. Working note number 5. Any problem? I'm telling you there's a reason behind it. Working note number 5. I want to put this data into head. Calculation of revaluation profit or revaluation loss. I want to put one format into head. Very important. Now here, so far up to this question, we did working note 4. From revaluation onwards, we'll have working note number 5 and 6 coming into picture. Now only 5. 6 is for depreciation. Depreciation is not there. So we'll restrict with 5. Market value of land as on date of acquisition. Please tell me what is the market value of the land on the date of acquisition? 14,50,000. In this question, luckily I gave you the difference directly. Madam, 50,000 rupees is what? Increase in the value of the land. Correct? No. So market value of the land on the date of acquisition is 14,50,000. In the balance sheet it was 14 lakh. 50,000 revaluation if I add, what is my total upgraded land value? 14,50,000. In the upcoming question, they will not tell you the difference 50,000 directly. They will tell you the market value of the land and building is how much, 14,50,000 they'll tell you. Now this you will compare with what? This I'll compare with book value. Market value is also called as fair value. I'll compare this with the book value. Book value of land as on what I need. I want on the date of acquisition. Date of acquisition. Be very clear. How much is the book value of the land on the date of acquisition? 14 lakh rupees. Take a highlighter. Highlight this point. I need market value, fair value on the date of acquisition. I need book value on the date of acquisition. In future, can I say there'll be chances that they will not give book value on date of acquisition. They'll give book value on some other date. Some other date they'll give you. Possible. So for that, we have to do some differential treatment. So I want to put a concept in your head that we are calculating revaluation on the date of acquisition. Why? Because I want to calculate the goodwill and capital reserve properly. Goodwill and capital reserve is calculated on the date of acquisition. So on the date of acquisition, my investment and the net asset should be on the date of acquisition. It should be reflecting the true value on the date of acquisition. So I want everything on the date of acquisition. Okay, not okay. So my question to all of you, whenever you do revaluation, you have to have two data. What two data? One, I should have fair value or market value. Second, I should have book value. Both of these should be on which date? On date of acquisition. Say on date of acquisition. Say again, on date of acquisition. Worth of the land is 14 lakh in the books. But in real life, if I go and sell it, how much will I get it? 1450. So value of the land is increased by 50,000. This is called as revaluation profit. Okay, not okay. In the upcoming two examples, this will get more complicated. This will get more complicated. I'll be doing working note like this only. So here, these two information are very, very important. Now, my question to all of you, 50,000 rupees, 50,000 rupees revaluation profit. Should I add in the pre-acquisition profit or should I add in the post? Pre or post? Think and respond.
Date of any post there. You said me. I made it is a post. Because you said if it is on or after it is post and if it is before date of acquisition it is.
When did I say that?
Sir, जब मैंने बोला था आपने बोला था there and
मैं तो लास्ट क्लास में बोला तो ऑन आफ्टर से भूल जा करके. There's no on, no after. Sorry? Very good. She got the point. 14 lakh is the cost of the asset. Somewhere in the earlier years we have purchased when we don't know. When we came to 112.23, the worth of the asset is how much? 14 lakh 50,000. This increment has happened during which period? It has happened during the pre-period. During the pre-period. Concept is clear? This increment was I purchased land 5 years ago. I waited for 5 years. During this waiting period only the value of the land has grown. So that waiting period is nothing but pre-acquisition period. So always a revaluation profit and loss will be added and subtracted with the pre-profit, pre-profit, pre-profit. Okay or not okay? Don't by heart understand the logic. Since the growth or the degrowth of the asset has happened during the pre-period, the corresponding profit and loss also will belong to the pre-period. Hence, we are adding this to the pre-period and not to the post-period. Is the logic clear, madam? Now, is there any time adjustment to be done? Any time adjustment? No, because the reserve and surplus what is given this 5 lakh and the date of acquisition both are same. So no need of time adjustment. Now tell me the total, please. Total is 5,50,000. Post is 0. This is 5,50,000. Is total column anywhere relevant actually? No, but we're doing for formatting purpose. In exam, if you avoid total column also, I'm okay. I have no problem. But I want to put a concept in your head. Total column comes where when you're taking the difference between these two, then total column is important. Otherwise, not required. But I'm putting the format throughout because I don't want you to forget it. Now, next is what people? Donkey fellow. Who will split it? H limited and minority. H limited and others. How much is H limited holding? 80%. And this is 20%. How much it is? 4,40,000 and 1,10,000. Very good. Now we're done with AOP. Second is working note number 2. Calculation of goodwill capital reserve. Goodwill capital reserve. Particulars. Working amount. Investment done as 10 lakh on the date of acquisition. In exam, are we supposed to write DON bracket income? Not required. This we're doing only for a practice. This I compare with net asset in the beginning of the year on the date of acquisition. So therefore, the share capital I should have on the date of acquisition, and I want the revaluation reserve also on the date of acquisition, which is the real revaluation reserve, true revaluation reserve, true net asset I want, real net asset, up-to-date net asset. So pre-acquisition profit, how much it is? We have already calculated. 4,40,000 already calculated. Now share capital is how much? 9 lakh is the share capital into 80%. How much it is? 7,20,000. And this is coming from working note number 1, which is 4,40,000. 720 capital, 440 pre-profit. What is the total amount, total net benefit? 11,60,000 ka benefit you're getting, but how much are you paying? Only 10 lakh. 1,60,000 ka profit, which is capital reserve. Earlier, we got capital reserve how much? 120. The difference between 120 and 160 is how much? Now we got how much? 160. Difference is 40,000. Now, people think that what's the difference is 50. No, sir. Revaluation is a 50. Donkey fellow. The revaluation profit, does entire 100% belong to me? No, in that 20% belongs to minority. Upon this 40% is what? 50,000 is total revaluation reserve multiplied by holding company ka share, which is 40,000. So you ignored this 40,000 rupees, hence your profit was less. Since I considered 40,000 ka revaluation profit, I got my profit as 160. Got it? Not got it. This is comparison of investment with the old net asset, which does not give true picture. This 160 is comparing the investment with the new net asset, which will give true picture, today's picture. Next is working note number 3. Working note number 3. Working note number 2, do you have any problem? Soma, okay, not okay?
Okay, sir.
Now working note 3, calculation of minority interest. Particulars, workings amount. Share capital on the date of acquisition. 9 lakh into 20%. How much it is? 1,80,000. Then pre-acquisition profit, how much it is? Coming from AOP. 1,10,000. Add post-acquisition profit, which is 0. Total how much? 2 lakh? 90, huh? 2,90,000. This is total minority interest as on the date of acquisition. As on the date of acquisition. 440, 110. Capital reserve, 160. Minority interest, I didn't calculate. It's okay. We got it. It's okay. Okay, here they've asked only goodwill and CR. But we did minority interest also. No problem. Now, next class, I'll make it a little bit complicated. We will do revaluation with depreciation. This is one complication. Next example, 16th example. Here in 16th question, timing difference also is coming. Revaluation also is coming. And depreciation somewhere in the middle of the year. 15th question is beginning of the year depreciation. Here it is middle. So I'm going to complicate a bit by bit. If all these 3 cases we do it, there's no question that you can't handle it when it comes to revaluation, which means every question can be done easily. So in short, what I'm doing is I'm breaking down all the adjustments, masalas into small parts with various examples. So once you know all the adjustments individually, if I put it together, it becomes easy to solve. If I take the biggest question and solve all the adjustments, you'll get confused. So I'm putting all the adjustments in small parts. Working note number, yeah. So here basically if you see, working note number 5 I'll rename as 4 because there is no consolidated reserve and surplus.
And that's
तो आएगा इस क्वेश्चन के लिए नहीं हो गया डन कैन आई वाइंड अप when are we meeting tomorrow? Okay, I'll update. Either we might have a class tomorrow or Wednesday. Either out of Tuesday and Wednesday, one day I'm planning off because I have to handle foundation people for some doubts they have. So if I have class with them tomorrow, then I'll cancel your class tomorrow. We'll have it on Sunday, Wednesday. If they're not available tomorrow, if I'm doing doubt solving for them on Wednesday, then I'll have class for you tomorrow. I'll put it in the group. Which notes?
exam scanner.
Scanner, I'll ask Anita ma'am to upload it. Okay? Chalo. Guys, that's all from my side for this session. I'll see all of you in the next class. Until then, bye-bye. See you. Take care. Thank you, people. Thank you.
Thank you, sir.
Thank you, Gana.